Hello, welcome to Trading Day. We're going to kick off the show with the recovery that we're seeing in Nvidia. We have seen a bit of a pullback. Let's talk about this with a man who knows it better than most. Let's bring in Dan Ives. He's Managing Director and Senior Equity Analyst at Wedbush. Dan, thank you as always for joining us. Great to see you. How are you doing today?
Great to be here. Nvidia's up. It's a better day today than yesterday.
Yeah, what kind of questions are you getting? I notice your outfit is a little bit more subdued, and I wonder if that goes with what the Nvidia trade is. We have this promo. When we promo you, Dan Ives, I don't know if you know this, but we have this picture of you in a gray suit and a burgundy tie. And I just want to contrast that with the Dan Ives of today. This is kind of like what's happened with AI too, right? It was kind of subdued at first.
That was a pre-AI Dan Ives.
And this is post-AI Dan Ives. Are you still living the dream, Dan, even with this pullback that we've seen in Nvidia?
Look, Amber, it's 9 p.m. in the AI party that's going to 4 a.m. The point is, this is just a near-term pullback that I believe is going to be short-lived. I think a year from now, we're looking at $3-4 trillion market caps. Godfather of AI, Jensen, Nvidia will be one of them, along with Apple and Microsoft.
Let's talk price target then. Why not be, I guess, more aggressive with yours and where it can go? What's keeping you from being a little bit more unrestrained?
Look, the bull case is 200. And I think when you actually look at where this all plays out, this is the start now of the monetization that's going to continue for Jensen and Nvidia. And I think it's all now going to be about the second, third, fourth derivatives of AI playing out over the next 6 to 9 months.
As we all know, Nvidia stock recently saw a significant rebound after a recent correction, and Wedbush Securities Dan Ives appeared in an interview with Bloomberg to talk about that, saying that it was just a near-term pullback. Not only that, but he also predicted that Nvidia's market cap could soar to $4 trillion, placing it alongside tech giants like Apple and Microsoft as the world's most valuable company. Dan Ives has a bullish price target of $200 on Nvidia stock, and this price target implies a market cap of nearly $5 trillion. But will Nvidia really hit these numbers? And is Ives right to be optimistic about the company's future? In today's video, we're going to answer these questions by discussing some analysts' opinions on Nvidia stock, as well as some company fundamentals that make the stock a compelling investment opportunity. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Let me ask you this, Steve. So Peter Bukvar today, who is a very smart strategist like yourself, telling his clients this morning, he said for the past month or so, Steve, that Nvidia is what he's been making a beeline for. Not the 10-year. He goes right to Nvidia, sort of his gauge, his general barometer. Is that what you've been doing, Steve? Are you as focused on Nvidia, Jensen Huang's company?
For better or worse, I have no choice but to be.
Why do you say that, Steve?
Because it's Nvidia's market and we're all just trading in it. I mean, realistically, it's been dragging us higher. And, you could see now we're in a bit of an interesting little cycle where the index, if you look at the major indices, and I'll define them as S&P 500 and NASDAQ 100, they move with Nvidia. Yesterday, for example, they sold off, S&P not in a major way, because the difference was the advancers on the NYSE outpaced decliners 2-to-1. Today, it's the opposite. So you've got Nvidia and the big cap techs pulling the market higher, whereas most of the stocks are lower. So it's this weird Nvidia and friends vis-a-vis everybody else. And it's a strange dynamic right now.
Now, it's interesting because I know you saw the piece that our Josh Schaefer highlighted today with some research from BlackRock saying that tech mega caps leading is not necessarily a bad thing because their earnings are doing well. So it's not as though they're leading with sort of nothing behind it. Is that how you see things, though?
Yes, but I mentioned I happened to see Josh on the way in.
Yeah. He might have told us that.
Yes, but the reason is, I'm not going to contest the data, and I guess it's not necessarily the death knell if it's a narrow rally, but just something nags at me that, because if everybody's trying to crowd into one particular sector, what happens if they try to get out? And that becomes very problematic. We didn't see that become a problem yesterday. I think that's because of end of the quarter factors making it more of a rotation. Yes, these companies do earn very good money. And someone asked me today, is Nvidia, would you buy Nvidia at these levels? And my comment was kind of neither here nor there, because it's not cheap, but it's not expensive either, because they do earn ridiculous amounts of money. It's just how much growth is priced in. And if they meet their growth targets, if they continue to grow at this exponential rate, it's not an expensive stock.
It's not just Dan Ives who thinks Nvidia is headed for a $200 per share price, as Constellation Research founder and principal analyst Ray Wang also has a $200 price target on the stock for the next 12 months. Other big names on Wall Street are bullish, but less optimistic. For example, Jefferies analyst Blaine Curtis recently raised his price target on the stock to $150 from $135. And Melius research analyst Ben Reitzes also raised his price target to $160 from $125, both analysts maintaining a buy rating. Wall Street is bullish on Nvidia because of the company's impact on the broader AI industry, as well as its hardware and software capabilities. But there are a lot more reasons why investors should view Nvidia stock as a golden investment opportunity, and we're going to explore some of them in today's video. Let's dive right into it. Hello, everyone, and welcome back to Investocracy.
The tech and chip stocks started a retreat from recent record highs. For more on this, we want to bring in Gene Munster. He is Deepwater Asset Management Managing Partner. Gene, any of this surprise you, or what are you thinking about what we've seen?
Becky, it was been a little bit of a surprise, given I think that all the fundamentals suggest that this AI trade is in great shape. Of course, the trade-off the past week has been down 10% for the bigger tech, for the bigger chip companies. TSM is up there down 5%. And what I think it really speaks to is investors' concern. We're already jumping forward, already starting to think about how the June quarter is going to play out. So that's kind of the third week in July. So I think that that's the reason why they've been spooked. It is a surprise to me, just given I think all the fundamentals are pointing in the right direction. Recently, Deepwater and our flagship Titan fund, we purchased Micron. They're, of course, reporting this Wednesday, which really sets up for the bellwether in AI for the next 2 months. NVIDIA is not going to report till the third week in August. And so, Becky, I think that I'm surprised about some of the concern. I guess it's warranted given part of the run. And I think this is going to be a great week for AI investors, because ultimately, I think Micron is going to exceed that 87% revenue target that they have out there, and investors are going to be more confident in the 50% growth that they have for next year. So feeling very good about AI, the AI trade here.
Nvidia's recent pullback surprised many investors as it wiped away more than $400 billion in market value. So, the company's current recovery is a very welcome change to what was going on. Any stock that climbs as much as Nvidia has, up more than 1,000% since the fall of 2022, is vulnerable to some of its investors selling shares in order to lock in some profits. And this is exactly what happened with the stock. So, that earlier run makes a 13% drop over 3 days look like a relative trifle. Nvidia's fantastic run happened because there's been nearly insatiable demand for the company's chips to power AI applications. And as a result of this, Nvidia has played a big role in the US stock market's recent record runs, even as the economy's growth slows under the weight of high interest rates. And it's very likely that this strong demand for the company's offerings will continue, as Nvidia's CEO, Jensen Huang, recently said that demand for the company's flagship H100 chips is still so strong, even as they prepare to launch the more powerful Blackwell GPUs later this year. Jensen added that demand for both platforms will outstrip supply well into next year, with the complexity of these chips also challenging the company's efforts to keep pace. If anything, that means huge revenue streams for the next 2 to 3 years, or even more. With this in mind, Should investors be rushing to buy more Nvidia shares, especially as the company prepares to report earnings in August? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
It's time for today's three-stock lunch. With our trades is Scott Nations, president of Nations Indexes. Scott, it's great to have you here today. And we got to start with the stock everyone is talking about. Nvidia went from down 15% from the highs to snapping back almost 6% today. What would you do with the stock here?
Nvidia is a buy, and the scale of the rally over the last couple of years makes it easy to think it's in a bubble. But the forward PE is only 42.5. So that's not a bubble. I mean, if you want a bubble, in March of 2000, the PE for Cisco was 196.
Wow.
So talk to me when NVIDIA gets near there. So we get to buy because the rush to AI is not going to ease. We get to buy NVIDIA, which is the premier name in the space on a pullback. And the company has earned this PE. The last quarter, year over year, increased revenue 255%, and operating income increased by 6 times. So it's performing. It's a great company making what everybody wants and at actually a reasonable valuation.
In a recent statement, Darren Nathan, head of equity research at Hargreaves Lansdowne, said that while Nvidia stock has declined in recent days, one must also look at the bigger picture. He noted that shares have still gained 190% on a 12-month view, so it's no surprise some investors are locking in some profits. Nathan also isn't too worried about potential wider spread implications. In fact, he said that although Nvidia has sneezed, the wider market hasn't caught a cold with a mixture of less extreme movements in both directions for the rest of the Magnificent Seven. Even though the recent dip was seen as a buying opportunity by many analysts and investors who think that Nvidia is fairly priced, some critics say that Nvidia stock still looks expensive. This is because the stock is trading at a price that's 73 times higher than the profit that it's produced over the last 12 months. And that makes it look much more expensive than the broad S&P 500 index, where companies are trading at just 26 times their overall earnings. But the thing is, Nvidia's incredible growth could actually keep going as it ushers in a new era that proponents say will remake the economy. Nvidia's upcoming Blackwell B200 GPUs and GB200 superchips can deliver computations 30 times faster than their predecessors, while also significantly reducing total cost of ownership and energy consumption by 25 times over an H100. And since no tech, AI, or cloud services company wants to fall behind its competitors in the AI race, Nvidia's existing and potential customers will always seek the company's newest chips, which means that Nvidia's sales and profits will continue to increase. However, based on its expected profit over the next 12 months, Nvidia is trading at a still expensive but more reasonable price-earnings ratio of roughly 40. And if generative AI hardware deployments are still only in year 2 of what could be a 3 to 5 year deployment cycle, as analysts at Bank of America suggest, the possible runway of growth could make it look even more compelling. Analysts estimate that the company's revenue for the fiscal year that ends in January 2025 will reach $119.9 billion, about double its revenue for fiscal 2024 and more than 4 times its receipts the year before that. Therefore, if you're an investor who believes in Nvidia's ability to achieve all of these ambitious goals, then Nvidia stock should be a no-brainer for you right now, as it trades under $150, while many analysts, including Dan Ives, believe that it might go to $200 before we know it. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.